So April 1st, end of quarter one, beginning of quarter two, and what an interesting quarter it's been. Get to reflect here on the grounds of Emo Court. You can probably see in the background. This is in the Midlands in Ireland. It's a neoclassical mansion right here in the Midlands. Some beautiful parkland here. Actually feel like I've got it all to myself. It's early on Saturday morning. So actually nobody around, surprisingly. Normally there's a few more people. But yeah, let's take a look at the week that's been. Reflecting on some of the items for the quarter that's been, and look forward to the quarter ahead. I had the opportunity this week to record a couple of podcasts, which was great fun. They'll be coming up in the next couple of weeks. So I met with Kavitha Patel, who is principal at Muse Climate Partners out of New York. So really interesting conversation there with Kavitha, talking about what it's like to be a woman in the private capital sector, her career journey to date. Obviously the investment thesis of Muse as a impact and sustainability venture capital firm focused on climate tech, early stage. So that's a great conversation. Looking forward to sharing that with you. Also got to sit down face to face with Bobby Healy, who is a founder. This is part of our new founder series as part of the People of Private Capital podcast. And Bobby shared his entire entrepreneurial journey across multiple companies, and really an incredible story leading right up to today, where he is the CEO and founder of Mana Drone Delivery, one of the most successful and rapidly growing drone delivery companies in the world, but actually based out of Ireland, soon moving to the US and actually another European country. So yeah, really looking forward to sharing those with you. Hope you find them interesting. Yeah, many more to come, some great exciting guests to come. So look forward to getting those out there in the next week or two. So as we come out of tax season, we've definitely seen an uptick in companies looking at perhaps a post-mortem on how tax season went and ways in which they could improve that. So that's been, a very noticeable uptick in activity for us. Also seeing a very noticeable increase in corporate venture capital activity. I guess this is the upside of the market conditions right now. There are a lot of assets that have been marked down, opportunities if you have the cash to swoop in and pick them up at a discount. So I think that's a positive trend if you're in the corporate venture capital space. If you are, come and have a chat with us. We're powering a number of corporate venture capital operations, helping them with deal flow management, portfolio management, etc. Even if you're not in corporate venture capital but want to get your arms around your portfolio, come and have a chat with us. I spoke with a couple of corporate venture capital companies this week. This is the venture arm of standard companies that have additional cash that they need to, for capital, they want to put into either investing in companies that have a strategic alignment with their business, or just want to put their capital to work. And clearly a great time for them. I guess the upside of this down market is there is plenty of value to be had. Investments that have been marked down, companies whose valuations have been impacted negatively, but actually represents a great opportunity for the corporate venture capital community to, no pun intended, but to capitalize on that opportunity. And so we power a number of corporate venture capital companies' operations, helping them with deal flow management and portfolio management. So if that's something that's on your agenda, please come have a chat with us here at Asset Class. We'd be delighted to help. So that's an interesting trend that I've seen, a marked pickup in the last couple of weeks. And as we enter Q2 here, next week I'll be traveling to the East Coast in the US. spending some time over the next couple of weeks in New York, Boston, Chicago, probably Atlanta also. There's a marked uptick in, I guess, post-tax season activity. Companies looking at perhaps a post-mortem on how the tax season went and looking at it as an opportunity to improve their operations. So lots of activity there. Looking forward to meeting with some of our clients also and getting a sense of what's happening in the broader private capital markets with a number of venture capital companies that we're meeting and some private equity companies that are very active right now, interestingly. So it's going to be a great couple of weeks ahead. As a company, we've been very busy also this past quarter from a development perspective, delivering a range of new fund administration tools for companies that are either managing part of that process or supporting part of that process themselves. So everything from waterfall calculations to capital call issuance, distributions issuance, managing the movement of money. Really a lot of development there. So if you'd like to know more, go to assetclass.com, click on the book a demo page. We'd be delighted to take you through our capabilities there. We've also delivered a number of integrations, so working with companies like Parallel Markets. If you have an AIC or accredited investor certification requirement as part of your due diligence for onboarding of clients, we have integration with that company right now and a range of others. So TalkDesk, if you're a TalkDesk user, we've delivered integration with that. So really the development team has been firing on all cylinders to meet the needs of our clients. So very exciting times there too. One of the other trends that I've seen really come back into vogue in more challenging times, you see some of these trends emerge or re-emerge. I can certainly remember post the dot-com bubble, late 90s, early 2000s. I'm aging myself a little bit there, but what we referred to at the time as cooperation, which is really just forming partnerships, coming to agreement with companies that may have been your competitors in the past or may have had some slight overlap with what you do, actually coming together in times of challenge and working together to provide solutions for their clients. There's definitely been some outreach from the community to work with Asset Class, which has been really gratifying to see. They see value in what we're doing. And we're certainly very open to that. I think you've got to be client focused. We have a customer obsession at Asset Class. It's one of our core principles. And so working with partners, some of whom, on a day-to-day basis we may even compete with, is certainly part of, doing business in this market. And so I think we'll have some interesting developments there in the coming months and perhaps even an announcement or two from ourselves in that regard. So it'll be interesting to watch that space develop. I mentioned earlier that we have a new sub-series, I guess, as part of the People of Private Capital podcast, the Founder Series. And it made me think this past week, about those founders that are in the market right now, perhaps looking to raise capital. I saw a worrying statistic. When you think about it, there's a lot of companies who raised in 2020, 2021, that will be coming towards the end of that runway. And in fact, saw a stat for those who did raise around that time that something like 60% of them have less than 12 months cash, which is a really challenging situation to be in because the funding environment right now, at least for the last quarter or two, has been challenging. I will say that there's, as I mentioned, an uptick in corporate venture capital. So perhaps if you're a founder, worth looking at some of the alternative sources, including corporate venture capital. Look to the clients that you're working with, ask if they have a corporate venture capital arm, and see if that's a route. I think it must be very challenging. Thankfully, as a company, we raised in June of last year, so we're in a very strong financial position, growing significantly in a good market, all of which helps. There is definitely a race to quality when it comes to startup investment in particular. And so you've got to really look at your metrics, look at your cash burn, look at the opportunities the market is presenting. And if you are looking to raise capital, look at, I'd suggest those non-traditional channels as much as you're looking at the traditional, venture capital channels also. In any event, if you are a founder, the very best of luck with that. Definitely thinking about that right now for those companies who have that challenge. So there we have it, Q1 over with and in the bag. Q2 ahead of us. I think a very active Q2 in prospect. Traditionally, once tax season is out of the way and companies get to take a look at their operations, it becomes very busy for us. So looking forward to getting out there and engaging over April, May, June, and looking forward to engaging with you guys. Hope you had a great Q1 and the very best of luck for Q2. Let's get after it. I'll chat to you soon.